Hello, everyone, and welcome. My name is Jeff Rock, and thank you so much for joining us on another D. Hilton Associates webinar. Today, this webinar will focus on SEG-based credit unions and the different ways those credit unions are approaching their relationships with company partners and how they are reacting to effects an employer's stability has on their membership. Joining me today, I have Brian Kidwell. Hi, Brian. How are you?
Doing good.
I also have Hillary Miley. Hi, Hillary.
Hi, how are you?
And also, we do have a special guest joining us today from BCU, Dave Blum. Dave is a Senior Vice President of Corporate Services in a U.S. Service Center at BCU. We asked Dave to collaborate with us on this webinar because BCU is a leader in the industry among SEG credit unions and has perfected building successful relationships with company partners. So a couple quick administrative items here. We will be recording this webinar. We'll have that posted on our website in about 3 to 5 business days. So go ahead and keep an eye out for that. We do have a lot of content to go through, as always. All our webinars are really packed to the brim. So without further ado, I'll go ahead and kick it over to Hillary. Take it away, Hillary.
Hi, everyone. Thanks so much for joining us today. So the current pandemic has forced credit unions to adjust the way they operate in order to protect their employees and members, meet their members' financial needs, and comply with federal, state, and local directives. While all credit unions have made significant changes to meet the needs of their members, we have seen unique challenges for those credit unions that serve select employer groups. For many of them, their SEG facilities have closed or access to SEG employees is even more limited than before. As a result, we wanted to explore how credit unions are managing these SEG relationships, what strategies they're employing to ensure the credit union maintains a strong bond with their sponsors, how they're reacting to the effects an employer stability has on their membership, and finally, the creative ways credit unions are addressing the needs of their unique field of memberships and SEGs. As part of our COVID-19 survey series, we emailed a short survey to all credit union CEOs towards the end of June this year to gather data on these issues, and we were very pleased with the response that we received. We asked respondents to classify their field of membership, and half indicated they were community chartered. Another 26% were a combination of SEG and community, 17% were multi-SEG, 6% were single common bond, and 1% were tip charters. Over the last 20 years, we've seen a big shift from SEG-based credit unions to community charters for many reasons, but one is certainly that maintaining an employer-sponsor relationship is difficult and can create concentration risk, which we'll talk about a little bit more later. As of June 2020, among federally chartered credit unions, 20% were community and 26% were multi-SEG. However, 40% of credit unions were state chartered, which are often community charters. Now in 2000, 9% of federally chartered credit unions were community, while 37% were multi-SEG and only 9% were state chartered. Before we dive into SEG-specific challenges, let's talk about some of the challenges all credit unions are contending with currently, regardless of the field of membership. Before COVID, just under half of credit unions reported having any remote employees. Now, 90% of credit unions have remote employees. A quarter of credit unions say they do plan to have 100% of their employees return on site when possible, however. Like many industries, credit unions are evaluating how current remote operations could look long term and if it makes sense to continue remote work once the worst of the pandemic is over. Among survey respondents, almost 40% report they plan to make an entire department or area permanently remote, while another 16% plan to make part of a department or area at the credit union permanently remote. 12% were undecided on whether to move anything to permanently remote, and then 30% said they don't have any plans to make any departments permanently remote. Next, we asked credit unions what areas they were considering keeping remote. Most were back office related, such as accounting and loan processing, while others were considering functions like marketing, IT, or the call center. Credit unions also mentioned areas like compliance, collections, and loan underwriting. Just like many companies, credit unions have found ways to continue successfully operating remote and see an advantage to leveraging cost savings by limiting physical footprints and moving non-member facing roles to remote work.
One thing I want to jump in here on, I think that these stats are interesting. It's going to be interesting as we go to the end of the year and then into next year as to how some of these opinions change. Because right now, and I think everybody's grappling with this, and you saw there was a Wall Street, I think it was Wall Street Journal article last week. They were surveying Fortune 500 CEOs, Jamie Dimon, the Netflix, the internet companies, and there was a lot of mixed opinions on this idea because you're worried about collaboration, things of that nature. It's going to be interesting as we move into next year. I think this is going to be something we're going to want to keep an eye on. Both from obviously an expense standpoint, less obviously physical infrastructure carries less expense to it, but also the changes that members are now making. I mean, pretty much we forced everybody to start using mobile banking, right? And remote deposit capture and things of that nature. That's going to be something I think at D Hilton, we're going to want to really keep an eye on and continue to communicate to you. Because I know in talking to a lot of clients, there's a lot of question marks right now as to what 2021, 2022 is going to look like. Obviously, it's easy to outsource some of these back office functions to a degree, but what impact that has on collaboration, what impact that has on planning and things of that nature, I think is an unknown, not just for us. I think it's for the biggest companies in the world as well as the smallest. So anyways.
Yeah. And it will require, changes in processes internally, as well as just changes of how you communicate. So I think it will take some time for people to figure out what works best for their individual organization as well. All right. So next, we asked credit unions. So to help members during the pandemic, credit unions adopted a multitude of services and updated their offerings to ensure members had the support needed to survive as well as possible during such economic insecurity. Almost all respondents indicated that they implemented programs like skip a payment or loan payment deferral. 90% waived fees, 48% offered financial counseling, 46% offered PPP loans, 46% expanded drive-through services, and 42% increased cash withdrawal limits. We also saw a small number that offered early direct deposit, no interest loans, or 0% interest rate credit cards. We also asked what programs credit unions put into place specifically for their small business members. Most credit unions reported that they do not provide small businesses with additional support beyond what was listed on the previous slide. But among those that do, the most frequently cited types of support were loan modifications, loan refinancing, and payment deferral. Credit unions also reported offering consultations and curbside service for their small business members. For the 46% who offered PPP loans, many credit unions had to make adjustments to meet that high demand. 22% implemented new processes to support better turnaround times. 16% updated technology for the application process, and 16% increased staff coverage processing loan applications. For the 9% who selected other, those respondents reported outsourcing to a third party such as Cabbage, or they provided information to members on how to utilize another provider. This way, while they didn't offer the loans themselves, they could still assist members in applying for the loan and fulfill that goal of member service. They also reported shifting staff from different areas to meet demand rather than hiring. Okay, so now we're going to discuss some of the ways SEG-based credit unions are tackling COVID-19 and their specific field of memberships. As with any charter type, serving an employer group comes with specific challenges, including field of membership concentration that creates a significant relationship between the employer's success and the credit union's success, support from the employer group, governance challenges that are unique to SEG credit unions, and more. COVID has highlighted even more so some of these difficulties, as well as creating new ones. First, how do survey respondents classify their company partners' SEGs? There are many different iterations of multi-seg credit unions, with some serving many businesses and others serving a few very large employers. This, of course, impacts how a credit union tackles their SEG relationships and working with their partners. A little under 20% reported their SEGs are area community businesses. 16% are 1 to 2 large employers in the area. 12% are many large employers in the area. 4% are large employers in different parts of the US, and then 1% are 1 or 2 larger employers with a nationwide presence. So you can see there's a lot of variation about, what a SEG credit union looks like today.
Well, I was I was happy to see that there was some recognition, and I think a fair number of respondents who are still serving large employers, right? I mean, and obviously serving small businesses in the community is definitely important. But I think that was something we were really looking for out of this survey, is to see how much, I guess, credit unions are still tied in directly to, to large SEGs. As we all know, on this webinar, that credit unions have shifted a lot of their focus to community, but it was good to see that there's still a lot of recognition and business to be had in the large employer area.
Mm-hmm. We found the results of this question to be very interesting. From my perspective, particularly how realistic respondents were about their own perception of how well they're serving their company partners. Overall, credit unions are less confident currently in their ability to serve their SEG company partner. Before the pandemic, 30% felt they served their company partner extremely well, but only 20% feel that way during the pandemic. Another 30% felt they served their SEG moderately well, both now and before the pandemic. And then only a very small percentage, 2.5%, felt that they served their company partner slightly well before the pandemic, but that percentage has increased, and now 13% feel they're serving their SEG only slightly well. This highlights that while COVID has made things that much more difficult to access their SEG and maintain that relationship, even before the pandemic, a good portion of SEG credit unions didn't feel that confident in how well they were meeting the needs of their SEGs.
I think that couple of things I really stood out here. For one, the percentage that went from extremely well, right? So we thought we were doing a great job, and then things really fall apart in March and April, and then all of a sudden we have issues, right? I was a little surprised there wasn't any not well at all. So
nobody wants to come.
Nobody wants to come. Yeah, no one wants to mention that one. The slightly well going up. So I mean, I think overall this is going to be an interesting to look at, and in a couple of slides I'm going to talk a little bit further about this, but I would expect that the recognition of us not serving SEGs as well, and I kind of say that as a blanket SEG segment, because I know that there are credit unions doing a terrific job with SEG groups. I do think this one is going to continue to decline on the extremely well. I think it's as we continue to move through this pandemic and companies start to have to make more hard decisions, and I'm going to talk about that in a minute. It's going to be really interesting to see this. I think a lot of credit unions, and based on the percentages I'm looking at, there's at least a portion that are saying, what we thought the SEG needed now is not what they need, and we're having trouble kind of adapting to that. And we've seen that before over the years in doing strategic planning work. I can think of more than one credit union doing strategic planning work or merger work, where the reality is when the SEG, a good example, we had a SEG that had basically a union strike, and the credit union, the SEG came to the credit union and said, listen, I need your help doing some loan forbearance, delaying, loan. I need to work as a corp. This was basically senior management coming to the credit union. The credit union, unfortunately, was not of the size that they were able to service. I mean, they had a handful of employees and basically said, listen, we love you, but it's going to take us, 3 or 4 weeks to figure this out. And unfortunately, that SEG actually went to another credit union because that other credit union had the size and the resources to be able to service them. And it ended up actually eventually turning into a merger of that organization. But it reminds me a lot of that situation when we were talking about it from a strategic planning perspective, that there is going to, I think, be more of those challenges when you look at the companies that are facing layoffs, furloughs, things of that nature.
Yeah, definitely. So it's critically important to measure member and employee satisfaction, and all credit unions should be regularly evaluating how well they're doing at serving members. Here at Hilton, we highly recommend keeping a pulse on member satisfaction through regular member surveys, and it's important to evaluate how well you're doing at reaching your potential membership and what motivated a member to join your credit union. In order to be able to know how well you're serving your company partner, you have to put metrics in place that create a culture of regular evaluation and improvement. These metrics also demonstrate the value to your community partner. So if you have no formal measurement in place, it's even more difficult to be able to prove the benefit you provide to the employees of your SEG. So we asked respondents what metrics they use to measure how well they service their company partners. And credit unions utilized a lot of different methods. Some focused on growth and penetration measurements, such as new member growth, product penetration, wallet share, checking account penetration, and accounts per household. Credit unions also discussed impact of marketing initiatives like on-site visits, marketing campaign, and communication awareness among different segments of their membership, as well as click rates and webinar attendance. And then finally, credit unions also report utilizing measurement tools such as feedback channels and the use of surveys. We did see that some credit unions have less structured measurement tools in place, such as informal anecdotal feedback or gathering general staff feedback. Kind of like what Brian was saying earlier, this is definitely an area that's also influenced by resources and scale. Smaller credit unions, or those credit unions who serve many businesses, have a much harder time allocating resources to gathering feedback, providing data, and making sure that those metrics are consistent and reliable across their different SEGs in order to demonstrate to that SEG leadership, this is the value that we bring to your employees.
One quick question, Hillary. Did anyone mention demographics in this question? This is an open-ended?
Yes, they did. It was an open-ended, and no, not really. There wasn't like a big focus on how they, approach the different types of SEGs that they have.
It's one thing I think it's important to think about. I was thinking about this morning when reading through kind of this list, penetration rates. It's not just about penetration rates, I don't think. It's also about what are you getting, because, obviously if my SEG is aging, and the members are continuing to age with that SEG, and that SEG is going in and replacing, old, retirees with new employees, and we're not properly onboarding those employees or providing the services or the feel or the brand that someone who's 23 wants, or 25. So I thought that was something I wanted to ask about and kind of mention, that I think as you're measuring success too, it's also making sure that, yes, we have the SEG penetration, but our SEG penetration is not getting stale from a retiree, because obviously your loan demand starts to then become an issue.
Mm-hmm. As well as, if you serve a few different SEGs or many SEGs, leveraging what those different groups bring. Say you do have one SEG that is aging, but you also have a SEG that has a much younger membership. Well, obviously, that's the target that you're going to get for your loan demand and that sort of thing, while that you're not going to get at those other SEGs. So we've found that keeping communication open between the credit union and company partner management is critical to a credit union's access to employees of the SEG and to a continued presence at the employer. Despite that, almost 10% of credit unions reported they don't have a specific feedback process or don't solicit feedback at all from their SEGs, which was very interesting. Only 20% report they have discussions with SEG executive management, and 18% have SEG employee representation on their board. This confirms what we see frequently as one of the biggest challenges in being a SEG credit union, maintaining that connection to the employer groups and continually demonstrating the leadership that the credit unions a benefit to employees. About 7% of respondents indicated they use another method to solicit feedback, and that includes things like relationship managers dedicated to a SEG, working with a liaison at the employer, and then getting input from human resources. These are the biggest non-COVID related challenges that credit unions report in serving SEGs, and these were not surprising at all, as we see these issues frequently among SEG-based credit unions. The top three challenges were support from SEG management, access to SEG employees, and competition. Many employers today are moving away from an association with a credit union for legal reasons, concern about maintaining separation between the two entities. Credit unions have to continually stay in front of leadership and be able to demonstrate the value of the credit union as a benefit to employees. That's definitely not an easy feat, and further highlights the challenge of being one of many financial providers available to consumers. In addition, to do this successfully, it requires significant resources and scale, which many credit unions just aren't of a size to implement. Another thing we see that affects the level of support from SEG management is by having SEG representation on the credit union board. However, all credit unions have difficulties finding engaged volunteers who are willing and have the bandwidth to dedicate time required to be a credit union volunteer. And then this is, of course, compounded by the fact that the most connected members to the SEG would be current employees, who are even less likely as working professionals to be able to serve on a board. We see this often among SEG-based credit unions, and there is much higher turnover on those boards as a result. But without a doubt, the most successful ones are those who do have executive leadership serving on the credit union board. The second challenge, access to SEG employees, is also a really big hurdle. Traditionally, credit unions who serve employer groups have had space at employer facilities, but over time, we've seen that decrease as employers cite security concerns with having a credit union on site, a need to utilize the space themselves, and ultimately often a lack of interest in having a credit union present for employees. Actual physical facilities aren't the only issue. Credit unions also have to fight to be a part of the new employee orientation or be permitted to host events and visit the employer if they don't have a branch or facility on site. And ultimately, this comes down to being able to demonstrate to the leadership of community partners that the credit union is a benefit and it can be seen as a value add to the employer. Not only do SEG-based credit unions have to continually stay in front of SEG leadership in order to validate their role, but they're also contending with the same outside forces as all financial institutions, like competition, new fintech providers, and regulatory burden. On top of the regular challenges of maintaining a relationship with their company partners, credit unions have to work around restrictions now in place from COVID. If the employer's facility is closed, credit unions have lost that access to employees. Not only are their credit union facilities closed, but they've also lost the opportunity to have credit union representatives visit sites and work with employees. Business development representatives can't utilize their traditional methods of reaching employees. And we will talk a little bit later about what strategies credit unions are using to still reach those employees when in-person communication is impossible. Finally, respondents indicated that the credit union as a provider to employees is not a priority for company partner leadership currently. Like all employers, they're trying to ensure continued operations, the shift to remote work, and the overall economic climate. Making sure that the credit union is able to work with employees is just not top of mind for a lot of employer management.
And I think this highlights one of the main issues, right? I mean, the credit union's not a priority in the relationship. There's not a magical solution. It depends on the credit union. You already talked a little bit about legal challenges and security at the facilities. So, it'll be interesting to hear Dave's kind of comments on this and some of the challenges and successes that they've faced at BCU. At the end of the day, you have to provide this value proposition. And it makes so much sense when the company needs to pivot, when the company needs to do something different, the credit union can really be a valuable resource. And one of the things that I always talk to credit unions about in serving SEG groups is, at the end of the day, companies are looking for ways that they can offer a value and a value proposition to the employee without paying for it, right? Obviously pay raises is beautiful, but the credit union can be such a valuable resource. And I've heard time and time again, talking to clients where there's been furloughs, and we saw it a lot on these stats. You guys are going and doing loan extensions and things of that nature. From a company standpoint, having the credit union as truly a strategic partner is in my mind a huge benefit to companies. And I think a lot of it has to do with execution. It has to do with communication. It has to do with building the right foundation. And that's not a cheap or an easy thing to do. But, I always tell credit unions that don't underestimate, the power of serving SEGs, because it is a very, very strong value proposition. And when you talk to a corporate management, you say, listen, I can do all of this and it doesn't cost you a dime. That's a huge deal. And it's something that I think oftentimes we kind of underestimate both the value of it as well as the difficulty in doing it right.
And nowadays, it really isn't a benefit that you see at a lot of workplaces. So, it has just as much value as it always has, but it's not something that, I think you'd see at any company you worked for. So you highlight that it really can differentiate you as an employer.
Yeah. Well, I mean, we've heard countless examples, SEGs that moved locations. They needed relocation packages for employees. Who better to do that than a credit union? We're going to see a lot of this, and this is where we're going to is, I furlough a bunch of employees. The credit union can act as a valuable crutch to help us get through that issue. And we see that, credit unions are fulfilling some of that.
Yeah. Okay, so next, like we discussed on the previous slide, 60% of respondents said they have on-site facilities at their SEG locations, and 15% had to close those facilities completely. And depending on the employer, those closures might be long-term and have real implications for the credit union and their access to SEG employees, as well as how they service existing members. Even in non-pandemic times, being a SEG-based credit union relies completely on the health and success of the SEG. For those SEG credit unions that serve a small number of employers or are concentrated in one industry, economic downturns have a significant effect on their ability to operate. Almost 11% say their company partners have been affected by furloughs or layoffs. Half say they've been affected to a small extent, and another 18% say they expect they may be affected. Almost 20% of respondents were neutral on the financial stability of their largest company partner. And one thing I want to point out is, given that this study took place in June, I think we can strongly assume that these numbers will likely look very different at the end of this year. And in fact, we do plan to gather updated data on these topics at the end of the year to see how things have changed. So if you're interested in participating, please make sure to reach out to me. I can be reached at survey@dhilton.com because that will definitely be some interesting stats to gather.
This slide, I think, out of everything we look at, I think this is one of the most important slides. And I would love to see what this looks like as we move a little bit further along. How would you rate the current financial stability? Highly stable or stable? I think we're going to see some of this change. I mean, we saw yesterday Disney announced over 20,000 layoffs. You look at the airlines that they just announced this morning they're taking loans, but still it could be difficult. Travel and leisure, forget about just the obvious is, obvious like a Marriott or something like that. You have communities that are highly dependent on travel and on vacations and things of that nature. Las Vegas being a good one, right? So it's going to be interesting. I think depending on what happens, I think this will likely change, and we're going to see more SEGs start to have more of an impact, at least through the end of the year and into 2021. Unless bar some miracle vaccine that is distributed to the entire country overnight, which isn't going to happen, this is going to be something interesting to keep in mind with. And I think it's also going to probably, force more credit unions to either, do extensions as best they can. Delinquencies, charge-offs. I know a lot of credit unions have put extra money into provision just in case. But this is one that I think is going to be really, really important to monitor over through the end of the year, just because there's so many different areas that this is impacted.
Whether or not credit unions feel that their company partners are financially stable, or if their company partner has been affected by furloughs or layoffs, more than half of respondents indicated that their focus on the financial well-being of employees of their company partners has increased. And this is when the support of the company partner is most critical, and credit unions have the opportunity to demonstrate that benefit to employees and to management of their SEGs. We asked what programs credit unions have put into place for employees of their SEGs, and the most popular were loan deferments, loan extensions, fee waivers, skip a payment programs, and financial counseling. And while there are programs that are beneficial for all members, the most impactful programs and strategies vary depending on the SEG and the unique qualities of the employee base of those SEGs. Dave is definitely going to share how BCU approaches the different needs of their SEGs and ensures that the credit union is taking into account the unique situations across their different SEG groups.
Yeah, and there was a question about how are credit unions assisting with furloughs, and I think some of these things up here are it'll be interesting, as you mentioned it, to hear from Dave on some specifics they're doing. But in general, I think with furloughs, loan deferments is probably the most popular. The question becomes, is at what point does deferment become default, right? I mean, and that's the $1 million question that I think depending on the types of SEGs you're serving, depending on the geography, could really, and that could change too. I mean, obviously this environment is unheard of in a lot of ways. Things could change very rapidly, either for the good or for the bad.
As access to SEG employees is limited, we wanted to know some of the ways that credit unions are reaching those employees and leveraging other resources. In addition to methods like email and digital communications, credit unions are also utilizing things like the SEG's intranet, holding roundtables with the SEG, contributing to the SEG newsletter, and hosting webinars in order to reach those employees in different ways and ensure that any limited physical presence is overcome. Finally, how are credit unions collaborating with their SEGs to meet the needs of their employees? Only 14% say they work with executive leadership at their SEG to identify the needs of employees. 12% said they worked with human resources, and 16% have not worked directly with the SEG at all. While this is no doubt partly a result of the issue of employers having other priorities right now, it's also telling in the type of relationship that many credit unions have with their SEGs today. Keeping that communication and connection with your SEG during good economic times certainly has a notable effect on the ability to collaborate with the SEG during challenging times like this. I think it really drives home how important it is to maintain that relationship all the time, not just trying to get it now when it really matters to those members. All right, now we will turn it over to Dave at BCU to share how BCU approaches their SEG relationships, ensures they're meeting the needs of those employee groups, and how they tackle some of the challenges we've discussed so far.
Thanks, Hillary. And I just want to take a quick moment here and thank Brian and Hillary, as well as Dee Hilton, for putting this together. I think there's a lot of good information. Obviously, that came out of the survey. I took the survey as well, so some of my stats are in there. But I love collaborating with all the other credit unions that are on the phone and for the information. And I think to Hillary's point, information is fluid, especially with our company partners as they bring back some employees. So this information could change in 3 months and 6 months down the road, but appreciate you guys putting it together. And then on the logistics side of it, I think, Hillary, if we can put some, or if anybody has any questions, you can toss them in the chat button. And then we can hopefully have some time at the end to answer all those.
Yep, definitely.
So what I would like to do is just kind of give you a little background on BCU, where we came from, where we're at today. I'll touch a little bit on the core strategy that we have, which is kind of centered around financial well-being for our company partners' employees. I'll jump into a little bit of member segmentation. To Brian's point, what do different demographics need? What do they want? How do you communicate to them? I'll go through a little bit of company partner support, how we have some data sharing agreements with our company partners and how we report back on various different metrics to them. I'll walk through 3 quick scenarios of examples of success that we've had in the past with a couple mergers, as well as bringing a credit union right from the ground up. And then I'll try to finish with some COVID relief and assistance and how we're kind of trying to change the methodology going forward to make sure that we're supporting our company partner kind of needs. So as you look at the kind of highlights on the first page here, I don't need to spend too much time on here, but we've seen some really nice growth since 1981 when we just supported Baxter Healthcare employees. And now we're up to the point where we're over 270,000 members. We have almost 700 employees, over 65 branches throughout the United States and Puerto Rico, and about $4.5 billion in overall assets, including some strong capital, obviously. We are a very heavy loan shop. We like to loan all our money out. However, since the pandemic, we've seen a large increase in deposits through various different sources, which I'm sure some of you guys have as well. But we have a real focus on service as well. We've been a big promoter of the Net Promoter Score methodology for years, and currently have a transactional NPS of about 79, which is really nice. But our core strategy is really supporting company partners, employees. And that's what we've kind of grown up since 1981. We do have a small community charter here in the Chicagoland area that includes about 6 counties. But overall, our core focus is the company partner employees, and I'll go over that in a couple slides. Just to touch on one of Brian and Hillary's comments earlier about overall credit union employees. We were in the same boat, I'm sure, as all of you. At one point, I think there was 98 of our overall employees that were working from home. We have taken a waved approach, and I would say that there's about 40% of our overall employees that are back in the office. But as you look kind of down the path remaining of this year, as well as in 2021, I think we will adopt some type of flexible work environment, especially for the back office folks, to make sure that there's flexibility about being in the office and working from home, because we have that technology in place. Hillary, can you hit the next slide? A little timeline of BCU. You know, over the last 15 years or so, BCU has pretty much supported the medical device industry, starting off obviously with Baxter and American Hospital and Travenol. And we've been able to grow some really, really strong relationships back in the day, and be able to support some of the spinoffs that Baxter had over the years, including Cardinal Healthcare, as well as Edward Life Science. In addition to that, I think, you know, as we have a pretty expansive network of contacts within Baxter, some of those executives went off to other companies such as CVS Caremark and Boston Scientific and Becton Dickinson. So I think those executives really saw value in what we were doing to Baxter employees, and wanted to take that benefit to that next company that they saw. If you look at, you know, around 2011, that was really our first kind of adventure outside of the medical device company, when we picked up Target's credit union and merged that $50 million credit union into, you know, BCU. And then we started really kind of attracting and having a nice strategy about additional company partner acquisition strategies. Therefore, we brought on United Health Group as a brand new credit union in 2017, and we recently merged Geico's credit union in August of this year. So what we really tried to do here was diversify our overall company partner base, as well as the industries that we support. And therefore, you know, we really haven't seen a whole lot of furloughs or layoffs within our company partners, because they're in industries that's pretty solid. You know, we don't support the hospitality industry, the entertainment industry, the airline industry. So we haven't seen some of the furloughs as well as layoffs as some individuals have. However, if you look at the overall household, we have seen some need for some hardship help, and I'll go over that in the COVID slide. Can you go to the next one, please, Hillary? Thank you. So overall strategy, as I spoke about earlier, you know, our core strategy is company partners, and we really are kind of picky, to be honest with you, about who we partner with. We want that company that has a real passion for well-being for their employees. We typically require exclusivity with our partners to make sure that we're the only ones that are providing, you know, financial products and services and financial well-being to their employees, because sometimes we are making a significant investment in various branch allocation as well as staffing. So over the last, you know, couple of years, I would say, you know, we've made large investments in our digital banking solution, and we have 65 branches now. So we have this kind of dual approach to how we provide service. And it really kind of gives us the opportunity to support those employees that are at the location that has a service center, as well as if they are remote. So, you know, there's a huge demand from our membership as well as from our company partners to make sure we have that dual offering. And I guess the last thing I would say here is relationships are key to our success at BCU. If you guys have ever met our CEO, Mike Valentine, I mean, he is the definition of relationships, and he has kind of instilled it in the culture of BCU over the last 25 years. And, you know, the amount of relationships we build within the HR pyramid, as well as with leadership at the site at corporate level, as well as leadership on various different other sites that we have service centers at, that's really been one of the keys to our success. You know, Hillary mentioned it in various other areas, that 19% of the group has direct feedback from the executives, and 18 has board representation. Every single one of our large companies have representation and presence on the board. And I think that's really good to help with just overall support and oversight from those board members to make sure that we are supporting their employees. One other thing I guess I'll say on this is, you know, we have a great marketing group. It's really top notch, and we do offer some co-branding to some of our larger partners. So everybody, you know, obviously always sees the BCU brand. However, we are Target Credit Union, a division of BCU for Target employees. We are United Health Group Credit Union, a division of BCU for United Health Group employees. And most recently, we are Geico Credit Union, a division of BCU for Geico employees. So if there's enough mass with our company partners, that is something that we offer. It definitely helps to build that endorsement throughout the employee base of that partner partnering with us. On the financial well-being side, I mean, we do a really nice job, in my opinion, of segmenting our existing membership base, as well as our company employees, to make sure that we're bringing relevant product offerings to every segment of their workforce. We have about 35 years of experience with various different company partners, and each one of them have a different employee base that we need to support. If that's from a white collar headquarter employee or a factory worker, we have to have a full product offering to make sure that they all have different needs, and make sure that we're communicating relevant product offerings so we can kind of personalize that message, and hopefully that member or potential member can take whatever action that he or she needs to make sure that they're building their financial well-being. I would say that, as you look on the slide here, these are some stats from a PwC study. But, a more financially stable employee is a more productive employee. And the more times, financial well-being is said, it used to be a buzzword, in my opinion, a couple of years ago, but I think every single chief financial or chief human resource officer, kind of looks at their employees. They're all looking to make sure that they're improving their overall financial well-being. And that is health well-being, that's just overall well-being in general. Because there's some real need out there for some of these segments of our employee population that really need to focus on some well-being content. So we've kind of structured a lot of our financial well-being content around some of the study that PwC did, but we also do customization to every single one of our company employees. If there's a specific need that one of their segments have, we're making sure that we are producing content for it and making sure that we're distributing that content through various different channels so they can digest it appropriately. So I think that, in addition to the investment that we're putting in the digital channel, we're definitely investing additional money, additional resources into the financial well-being piece of it, because we really think that that's a key function and a key ingredient going forward. So you might ask, hey Dave, how do you do it with your company partners? What do you show them? How do you get feedback? How do you get their buy-in? Brian talked a little bit about demographics as well, but we have data sharing with every single one of our large company partners. And this helps us really kind of produce success metrics, as well as align initiatives to help strengthen the relationship with acquiring new members, as well as engaging existing members. What you kind of see here on the screen right now is a sample dashboard that we give Target Credit Union actually on a monthly basis. And they provide data to us, we match it against our membership file, and we're able to produce various different penetration metrics. We track, you see the swim lanes on the right-hand side, we track every single initiative that we have going out to their employees, how we are doing on them, what does it look like, what channel is it going through, what does success look like? And it doesn't just hold us accountable, I think it holds the company accountable too, to make sure that they are giving us the access that we need to communicate to their employees to make sure that these are successful. So, we have different penetration rates, obviously, with all of our company partners and all of our locations. But, some of the impressive ones is Baxter. Obviously, we've been partnered with them, and it's a very mature relationship. But we have about 70% penetration. So 70% of their employees are credit union members, which is fantastic. Target executives, we have 86% of Target executives that are members of the credit union, and 62% of headquarters locations. Now, as you get to the point where they don't have access to an on-site facility, and we are trying to communicate to them remotely, obviously the penetration falls a little bit. So, Hillary and Brian talked a little bit about challenges. I think communicating to a remote employee is very, very difficult. You're just not going to get them as engaged as you possibly can if they're walking by a branch or an ATM. So that's always a challenge for us with all of our company partners. But I think we do as good a job as we possibly can through various different channels to make sure we're building awareness. A couple examples of some recent I would say successes that we've had is, I'm gonna go through real quick, the Target transaction, as well as the United Health Group and the Geico. Back in 2011, we took over the $50 million Target transaction. target credit union. It was underperforming. It was a single sponsored credit union. It just didn't have the scale to get to what Target needed for their employees. So we were able to come in and merge them within BCU. And in 30 months, I would say that we increased the overall size of the credit union by 3 times, which was pretty impressive. And I would say in 8 years, we've turned that credit union into almost a $900 million credit union just in 8 years, which is pretty impressive. I think we were able to come in with obviously a lot of the superior product offerings, as well as service, as well as co-branding, and provide their employees really what they need. And with the support that we had from the top of the house, as well as the board members and on-site leadership, we were able to communicate a real value add. United Health Group is a little bit different of an example. This is something that, United Health Group did not have a credit union, so we started from the ground zero. But in 30 months, we were able to build this from zero assets to over $200 million. As you see, there's obviously a little bit higher of a loan to share with this one, but there's a different demographic with some of the call centers on the UHG side that those individuals really had a high demand for loans. So we were able to definitely support what they needed, and we will see hopefully that loan to share decrease over time. Geico is our most recent success kind of story, if you will. And this is something that we just closed on virtually, to be honest with you, over the last, it was August of this year. So we did the whole merge and we did it all virtually. We took over 10 branches, as well as about $140 million of assets. But, in 30 days, we've already seen over 750 employees. We already have $14 million of loans in the pipeline and almost $500,000 of shares. So as you come in with a brand new product offering and a new branding and a new message, there's a little bit of, I would say, headwinds that we have to still get over from maybe some of the service levels that they had in the past, but we definitely see that there's a ton of opportunity with Geico going forward, and we're really excited about this one. So I guess the last slide I have is I definitely wanted to cover some of the COVID metrics that we see here. I think some of the numbers that you see on the left-hand side, we're really able to achieve just due to the fact that we were very, very quick and rapid on communication to employees regarding the accommodations that we were making. Like I said before, there was no real layoffs or furloughs from our core company partners. However, there was some hardship within the household, and we were able to help those members out. Saying that, I think that we went over, Brian and Hillary went over a lot of the accommodations and relief assistance that all the company partners or all of our credit unions did. We were the same way. There was obviously loan extensions, there was skip payments, there was income disruption loans, we did some PPP loans, but we were able to kind of implement things very, very quickly and communicate those out to our existing membership as well as potential members very quickly. And we were able to help out where we needed. And I think what this really did was actually solidify the relationship that we have with our company partners. And they really view us as a partner, not a vendor, as we're able to come to their aid on some of this. Another thing I wanted to touch on real quick on the top right is overall branch operations optimization. We talked about this a little bit already. We had every single one of our branches closed at one point. We are starting to open up. We have about 60% of them open right now, mostly on a limited basis, depending on what our company partners' needs are at that location. But what we did was try to load balance those resources to support other business areas within the BCU organization. One of those initially, obviously, was the call center. We had a lot of members that were calling in because the branch wasn't open, obviously. So we had the branch staff that was able to support the call center to make sure that our service levels did not decrease at all. We were also able to help collections and business services area make sure that we were able to process the loan extensions and the PPP loans. We had put some resources towards mortgages. Our mortgage pipeline is over $500 million at this point, and we're trying to make sure that the service level is still there. So we were able to take those employees that really weren't idle, or they're idle at some point because the branches were closed, and deploy them so they were really productive and keep service levels where they needed to be. I guess the last thing I would say here is on the overall BD efforts going forward. It's going to be different. I think that the days of the table in the cafeteria to run a table event or something like that is completely gone. So what we're trying to do is we're using Zoom and obviously some other video conferencing capabilities to do some virtual open houses, which is awesome. There's no more on-site type of new hire orientation presentations. So what we're doing is we're preparing videos to make sure that our company partners can show those to new hires going forward. Financial workshops, we're doing webinars, we're doing webcasts. We're trying to still kind of scratch the itch of what our company partners' employees' needs are by doing those virtually. And if that is, company partners has an issue maybe with, employees taking out 401k loans. That's a real hot topic right now. We've done a webinar to make sure that we're addressing that. Now, I would say that we're probably getting a little bit lower than historical participation there, but the individuals that actually come to those webcasts and webinars are very engaged and definitely are really excited about the topic that we're presenting on. We used to do various different quarterly campaigns. Now, all that content is on digital templates and communication style. So, as we are truly a partner with our company partners, they've allowed us to communicate through various different communication channels, through email, through SharePoint sites, and those types of things. So we had to change. We have to adopt. We have to be agile on how we communicate content going forward, because the historical ways that we did it, I don't think are going to be there anymore. I don't know if you guys all caught, one of the things that we do on an annual basis is I bring all of our company partners in, typically to Vernon Hills, Illinois, for a company partner roundtable once a year. I usually get about 14 to 16 of them, and we cover various different topics. We were obviously not able to do that this year. However, we did a virtual company partner roundtable, and a lot of the topics kind of revolved around this slide right now. What are their employees' needs are? How can we continue to make sure we're building awareness so they know that they're out there? Because in theory, there's not a better time to join a credit union than right now. All the relief assistance and the accommodations that we're making and the way our products and services and financial well-being content all kind of mold into the need of their employees is really, really impressive in my opinion. I guess, as I kind of close out here, we have 35 years of experience on really kind of supporting great companies, and we've learned a lot over that 35 years on various different segments and demographics. So we've really focused our overall offering and financial well-being around ways to support all segments of our company partners' employees. I think that our dual kind of channel service approach is definitely allowed us to be able to support those individuals at large locations as well as those remote locations. If it's via the app, if it's via a branch, if it's a call center, we're able to really kind of service our members whatever way that they want to digest this. And I think we're clearly able to kind of communicate member value overall to our company partners. So if their employees are utilizing our services, there's a real value to that. And I think if you have a more financial stable employee, you have a more productive employee. And I think more and more larger companies are kind of realizing that. I think COVID has been obviously interesting to all of us, but I truly believe that our company partners view us as a partner right now instead of a vendor, because we were able to act quickly. We were able to load balance resources to make sure that service levels stay high. We were able to communicate the relief and assistance through various different channels to current members as well as eligible members, not eligible. So we continue to try to kind of tweak the way that we are going to service all of our employees, all of our members, all of our company partners. But I would say it's not going to be easy. It's going to be changing on an everyday basis, but we have to be able to utilize technology because it's really kind of demanded of us from our company partners as well as our membership.
Dave, we have two, I think, easy questions or straightforward questions. We have one that's it's an interesting question. I'd be curious to hear. So I think we have about 5 minutes. So one question that came through was, how many credit union staff members does BCU dedicate to its company partnerships? And I think to expand on that, what percentage of the organization kind of manages those company partnerships? And when you're looking at a SEG group, what typically is success in terms of, is someone dedicated to one SEG group, a handful? What have you seen successful?
It's a great question, Brian. So I have two directors that report to me that just work on corporate relationship management. So they are really kind of dealing with our company partners on a daily basis. I also have a staff of 4 or 5 business development representatives that really are kind of executing on a lot of the campaigns that we're doing for our company partners. So I would say, to answer your question, each director has 3 to 4-ish kind of company partners that they're responsible for. And I'm definitely heavily involved in the day-to-day operations with the company partners, as well as trying to attract new company partners or merger perspectives.
What about terms of software? Another question we got is, what kind of software, SEG-based software or CRM type software are you guys utilizing to, I guess, probably keep track of these metrics, how to keep track of communications? Is it something like Salesforce or?
Well, embarrassingly, I mean, like before we implemented Salesforce about 6 months ago, it was an Excel spreadsheet, right? That we had contacts on that we would share, obviously, with all of our corporate relation managers as well as our regional branch staff. But we did implement Salesforce about 6 months ago, so we are utilizing that tool now to manage all of our contacts.
Okay. Good. There is another question here. I'm not sure. They're asking how you utilize Enrich with your SEG partners.
So Enrich is a financial well-being platform that we have. So okay. All of our financial well-being platform is kind of under the Life Money U brand. So we definitely use Enrich to supplement some of that content for all of our company partners. So it's a tool that we use depending on exactly what the need of our company partners' employees are. We can use a white paper. We could use a video. We could set up a separate webcast. We can kind of customize anything they need, or we have a library of a lot of financial well-being content that we've used in the past that we could pull from depending on what the need is.
So one last question. I know we have a couple of minutes for this one. This one I thought was the most interesting as it related to strategy, which was basically the question is, there's only a limited number of large companies, right? So when you look at BCU long-term strategically, how are you guys going to continue to grow? I think they're kind of talking about the water in the well and penetration rates and things of that nature. What are your thoughts on knowing the number of large companies is a finite group? What is the plan for either new company relationships, deeper relationships with existing companies, mergers, et cetera?
Yeah, I mean, we definitely feel that there's additional penetration levels that we can get from our existing company partner base as they, have new hire orientations, as we are a little lower penetrated on certain segments. So that's a strategy of ours. But to your other point, we think there's plenty of opportunity out there from various different large employers that don't have an offering today. Geico was a perfect example of that. That was a small credit union that we picked up in August. There might be some other those credit unions out there. There might be some additional companies like United Health Group that didn't have a credit union at all. I think as senior executives of these companies realize that they have a fiduciary responsibility for the overall well-being of their employees, they will start continuing to support, credit unions in general. I think it's a great benefit that employees can get from their employer that they can't get from a regional or a nationwide bank.
One other question that just came in. What services do BCU staff use to serve members of modest means, such as basic service accounts?
Yeah, so I would say over the years, we've learned a lot, especially, when we took on Target in 2011. And there was a segment of that company partners, employees, that we really weren't prepared for. So we've had additional product offerings that were developed over the last, 5 or 10 years to include a launch card, which is a secured credit card that helps rebuild credit. We've also done some short-term loan offerings that make sure that, we're promoting savings for our members. We're also helping them build their credit, and we're also educating them to make sure that they're getting out of the hole that they need. We also have over 100 goal consultants that can do one-on-one consultative sessions with any of our members and non-members, which is about a 20 to 40-minute session that they could have to help rebuild their credit or put a strategy together to get them out of the hole that they are. So we've developed a lot of products and services, I would say, over the last 5 or 10 years to make sure that we're supporting that individual segment.
And we're getting plenty of questions here. How do you find the appropriate contact at a prospective SEG to discuss partnerships? Contact info is usually difficult to get. How do you guys kind of tackle getting in there? Because I think we did establish through this PowerPoint that senior management and human HR are key pieces to the success of the SEG. How do you guys go about getting in there?
I mean, we've been very lucky, to be honest with you, over the past 35 years, and the amount of relationships that we've built with our existing company partners and the C-suites of those executives have really allowed us to tap that network and get direct introductions to C-suite executives at new potential companies, or we know an individual that sits on the board of one of these companies. So we basically have been tapping, Mike Valentine is, like I said, he's the definition of relationships. So his network of individuals that he knows that have been able to introduce us to the actual decision makers has really been where we focused. However, there's things that we're doing, like such as white papers and some other B2B type of marketing efforts going forward to make sure that we always keep a couple new company partners in the well.
One other question came through here to panelists and the attendees. Results on the virtual efforts. I mean, I think, and this is probably something everyone's feeling, is it's a work in progress. What kind of results are you seeing in your virtual efforts? What have been some of the success failures? Any suggestions or feedback? I think this is a great question to end on.
I'm sorry, Brian, was that to me? Can you repeat that?
Yes, I'm sorry. Yes, you do. To you.
And what was the question again? I'm sorry, you were breaking up a little bit for me.
Oh, so the question was your results on virtual efforts. Have you, what kind of benefits are you seeing? Obviously, I think you had alluded a little earlier that it's obviously a work in progress. Any suggestions or feedback you would have for other credit unions that are continuing they're trying to get in front of those managers and those SEGs via virtual as opposed to obviously in person?
Yeah, it's difficult. We've tried and failed a couple times, but the virtual open house is something that we're doing at a site-specific location now because there's various different needs. So I guess some advice that I would give is understand the need of the company partners, segmented employee that you want to attract, and then structure content and a message around that. I think bringing relevant product offering and services and financial well-being content to various segments is really a way to personalize that message and hopefully be relevant to the need that they have. But I would not take anything off the table. We're using Zoom. We're trying to use WebEx. We're using Teams. We're trying to use any really technology we possibly can to do some outreach.
And we do have Dave's information up here. So it's at dave.bloom@bcu.org. If you guys have any additional questions, come up with anything, I'm sure Dave would love to field your questions.
I'd be happy to obviously connect one-on-one with anybody on the phone if needed.
All right, guys, we are at definitely a lot of good contact, and we've gone a little bit over, so I appreciate you hanging around with us. Just to let you know that we did record this webinar, so if you had to drop off early or something along that line, we will be posting this in about 3 to 5 days on our website. Go ahead and look for it on dhilton.com. And if you have any further questions or comments, we have Brian's information and Hillary's information on the screen as well. You can go ahead and reach out to them. They'll be more than happy to talk with you. So we'll go ahead and conclude on that. Thank you so much for joining us, Brian and Hillary. We greatly appreciate it. And a special thank you to Dave. Thank you so much for participating with us. And thank you so much for everybody hanging along with us. If you have any questions, please feel free to reach out. There'll also be a survey that's going to be coming out very soon. Let us know how we're doing on these webinars, and we'll go ahead and have further information on that.
We are hosting our next webinar on October 14th. It is part 2 of our 2021 compensation forecast. So if you missed the first iteration 2 weeks ago, we are doing another follow-up webinar. So that link will be posted on our website soon, and please look for the invite. If you haven't received them, just reach out to us at info@dhilton.com and we can make sure that you're getting our webinar invites. Thanks so much, everyone, for joining us. We really appreciate it.
All right, we'll let everybody out. Thank you so much for joining us, and please stay safe, stay healthy, and we'll catch you on the next one.